Hey guys, it's August 26th. This is a market recap and current status and trade right now on gold. So real quick, just the context of yesterday. We had a high kind of consolidate, finally broke out of it, came back and retested it, was a short, came back and retested it one more time, was a very heavy short during the open market, US market, and came down and just kind of consolidated in this area for quite a while. And then eventually broke out of it at the end of the day and then just kept rising, right? So now we have an uptrend. We had an overall extreme downtrend, then we had an uptrend, and even within this context here, you have this low value area here and here where you could have shorted this morning, and that would have been a good short. We have this very strong downtrend, so obviously when you hit these levels you're going to have a reaction. So that was a 10, 20, 30, 40, 50, 60, 70, 80, 90, 100 tick move just off of that. So we talk about volatility in the last couple of days, and you can see that kind of working out right there. And every time frame has a context. So if this is a downtrend and you go against it, you look at the prior context of the market. Even though now we're in an uptrend, you look at areas possibly where to short, because now we're looking at, you know, going against this strong downtrend that we just had. So that was a trade right there. 100 ticks, 80 to 100 ticks right there could have made. And now we got to look at the next context. Now, are we still in a downtrend? Well, technically we are, because we're staying below these levels, but is there a trade? I think so, because we had this uptrend now during this time frame, and then we had this very small, very quick sell-off, obviously off of this trade up here. And then we look at, okay, well, look at this uptrend now. We could be ranging. So we come down to the lows here, all the way back down to the lows, and you look at this trend from here where it kind of started to break back out, and there's low value areas down here. So in an uptrend you could come down into these low value areas, and especially this one down here that was really deep. You could have taken that trade to buy here and scaled out along as you go, because we're not really sure what's going to happen, but we know that the price may range at this point, because it didn't break right through here. It stopped and then reversed on us. So there is some support right here in this level right here, and we're currently right now still in this level. As you can see, we're still in this support level right now. So what we'll need to see is either a breakdown of this area, for a complete breakdown, then a retest short, or this thing to come back up and come back down to retest it, and then we could go for a long. But at this point we really need to see this thing either move one way or another. Regardless, I want to show you guys real quickly. I had 10 contracts off this trade, and I'll start showing you guys on the charts, on my NinjaTrader charts, so you can see where my targets are at and visualize a little bit easier than on the price ladder, the dome, the depth of market chart that I had before. But basically I got in. Let me use my crosshairs here. So you have the crosshairs on my Thinkorswim chart, where could have bought down here at the lows, at the low value area, but actually ended up missing that. But if you look in a little bit closer, you see that the next low value area here, the one down here, and then the one I'm referencing is this one right here at 1136. Closed above there, because that was a reference point as well. Closed above there, right? Close it. Actually came back down and retested it very quickly. So I took that entry right there, as you can see on my chart. So at 1136 got an entry, and again, you know, I took it. This is a more advanced concept. Obviously I wouldn't recommend everybody take it, because if you missed this, you missed it. You know, you let it ride. But because of the volatility of the market right now is great, and I know that the market, if it moves, could make, you know, 50 to 60 ticks, sometimes 70 ticks, as it was yesterday on gold, off of a first and second time test of an area. I took that in consideration and say, okay, even if I get in, I could make at least 20 ticks, which I did immediately. So I had 10 contracts here, got out, scaled out at the 1138, and made a quick 20 ticks, and with 5 contracts that's $1,000. So I already netted $1,000. I still have 5 contracts on the table, but now it's still holding this level here that it broke out of, and I'm still in the 5 contracts. But what I did was I moved my stop up from the 10 to 13 or 13 tick stop. Now I moved it back up to break even plus 2. So I'll make $100 off this trade even if it goes against me. But that's $1,000 plus $100 off this trade, and you know, I only risked the 13 ticks initially, but that's why I wanted the 2-to-1 ratio, win a reward to win ratio, or reward to risk ratio. And I made the 2 at the 38. So I'm looking for this thing to keep going past the 38 and possibly to the 39. That would be a 3-to-1 ratio, and obviously past the 39 to the 40 level, that would be a 4-to-1 reward to risk ratio. So when you always look at it in that context, you know, I could have made a loss here, but I did secure my quick 20 points to get my 2-to-1. Now I have 5 contracts remaining, so I pushed this up, and you know, I cannot lose on this trade anymore. Right? So I already locked in my profits plus whatever else that the market wants to give me, and that's the setup. And my reward to risk was fine. Initially, obviously, off of 10 contracts, 13 ticks, and I made 2. It's, you know, barely squeezing by 2-to-1 reward to risk standards. But again, I took in context the fact that the volatility in the market is back, and markets will move in large amounts, as you can see this morning already off that short. You know, long downtrend comes up against it, short opportunity, and you see from the 1146 all down to the 11 almost 34, over 100 tick move, right? So it's just a huge range that you can see. And even on the other side, even if it moves just halfway there for a 50 to 60 tick move, you know, that's a lot of profit that you can squeeze out of the market there, right? So that's basically the idea and the concept behind why I took the trade. And I just want to show you just more examples as we start going through this volatile market, that there's huge opportunities in the market. And right now we don't even have a huge breakout trade yet. You know, we had the move down already, and then we came down for this long. And at this point, you know, we try to lock in as much as we can, and then we'll see some kind of consolidation sideways move. Same thing happened with oil. So oil the other day, we had these areas where it was moving sideways, came back up, retested the high value area, and it was just like a ladder, just perfect trend day. Boom, hit the high value area, broke out, came back sideways again and tested the next high value area, broke out, right? Came back down, hit the next high value area, 1, 2, 3 opportunities, broke out, finally came back down, retested the high value area right here, actually came back up again. At this point, you know, if you miss these 3 opportunities, you know, you let the market kind of do its thing, because this moved up huge, right? It moved up from the lows here, let's say at the 38.2, and moved up all the way to the highs of 39, almost 40, or 39.9, 39.88 right there. So that's quite a range, right? I mean, you're looking at over what, 100, 10, 20, 30, 40, 50, 60, almost 70 points. I mean, 70 ticks, 170 ticks. I mean, that's incredible, like we talked about. You know, almost a 200 tick range is not really normal market behavior on oil, but we're starting to see that because of volatility. And then you can see that even this range here held most of the US market, right? And you could use that as a reference point. Finally broke out above it. came back into this range again, bouncing, and now we're looking to see if this thing can either break out of here, this new range that we've created here, and you can see, you can even reference it back to when the market closed. You got that range here now, right? So you got to break out or break down, but if it's going to break down, you need it to really break out of this level here, right? You need to really break out of here, then come up for a retest, short the low value areas down here, and then for this thing to really start moving down. Or if it breaks out above here, look for it to break out really strong above here, and then come back down for a retest and buy. But it really, the targets you would be above here, and once it breaks out of here, there may be another opportunity for it to break out of here, come back down, retest for another long, right? Then you look at targets over here to the left, areas of resistance, that kind of pockets of sideways range right here, and obviously the next harder resistance would be this right here because of the longer time frame. So you hit like the bottom of this target around the 40, 70, 40, 80, and you can take targets there, take profit there once it moves up there. That'll obviously be over a 100-tick move as well if it does move that way. But that's how I look at the markets. Lots of opportunities, and hopefully you guys can take the profits out of the market by using these strategies, and I hope it does continue to work for you as it has for me. Joe, and this was my market review for the August 26th. We'll see you guys in a few hours as the next trade sets up. All right, talk to you guys soon. Bye bye.